for tuning into another episode. What I want to discuss today is DeFi lending and going into how DeFi loans work, as well as being able to provide you all with some resources towards the end of the video of how you can learn more and start your journey when it comes to DeFi. If you all can continue to like, subscribe, and share this video, it's greatly appreciated, and I thank you all for being able to walk with me along this journey and even watching this video right now. So when it comes to DeFi lending, this is one of the fastest growing parts of the blockchain and the cryptocurrency ecosystem. When it comes to DeFi, it really comes down to two decisions. You can either lend out your crypto to someone else and you can be able to earn interest on that, or you can borrow against your crypto and you can be able to earn interest as well. Now, traditionally, what you will see with most banks is you will have a loan officer and they will lend out loans to the public. But a reason why a lot of people like DeFi lending is because it's giving you the control to be the loan officer. You're essentially your own lender and you have the ability to be able to obtain a higher interest than what you would get in your bank. You know, with your savings account with your bank, it's not making you any interest. They're going to give you 0.0025%. You know, with some of these DeFi protocols, you can be able to start to earn interest on your crypto as low as 7%. Some numbers are much higher than that. So, you know, when it comes to DeFi lending, think of it as it's essentially logic that's being built on a network, and they're using smart contracts to be able to get involved with lending, borrowing, and staking within this financial services industry. So some of the biggest lenders that you'll hear when it comes to DeFi lending is Aave and Maker of the MakerDAO. And, you know, they have really, you know, done some great things within this space. And towards the end of the video, I'm actually going to show you all some of the total value lock that they actually have when it comes to DeFi. So for those of you that may not know what DeFi is, it's simply just a protocol around financial services that give people access to being able to lend, to borrow, and to stake from anywhere in the world. And essentially, you're using smart contracts on the blockchain, like I mentioned, and think of smart contracts as instructions to be able to facilitate an agreement. And once that agreement is met, then that smart contract is executed immediately. So when it comes to DeFi, you know, anyone can take out a loan without having to show proof of income. They don't have to show a proof of their identity. Then what you would have to do when you go with a bank, when you go to a bank, they're going to take you through all of these different bells and whistles to be able to loan out or to be able to take out a loan, you know, within the bank. So I want to really talk about how DeFi lending works. So when your crypto is sitting in your wallet, it's not earning any interest. It's simply increasing or decreasing. But when it comes to DeFi loans, you have the ability to lend out your crypto and you can give it to someone and you can provide it to someone and earn interest on it. The borrowing aspect, you're essentially participating in a lending pool. And people in the lending pool are essentially the loan officers. And it's the same type of concept that you will see with a traditional bank. So how exactly does DeFi loans work? When a borrower wants to take out a loan, they have to deposit via a smart contract an amount that's at least equal to that asset or higher than what the asset is that they're wanting to borrow from. So for example, if you wanted to borrow $1,000 of Bitcoin, typically what you will have to do is deposit $1,500 of Bitcoin, and then 1,000 of that will be loaned out as a stable coin. And essentially stable coins, they are just cryptocurrencies whose value is pegged to the dollar or pegged to another cryptocurrency. Now, MakerDAO, they're actually one of the largest, like I mentioned, players within this DeFi space. They have 16.24 total value locked when it comes to DeFi. And I'll put a link in this video. I talked about the MakerDAO in one of my videos with stablecoins explained. And I talked about the MakerDAO and the value of a decentralized stablecoin. Now, MakerDAO, they actually require borrowers to make a minimum of 150% of the value of the loan. So like the example I provided with Bitcoin earlier, that's the type of that's what you would experience if you're wanting to take out a loan through MakerDAO. Now, the reason being for this is because if the collateral falls below $1,000, what that protocol is going to do is it's going to liquidate that $500 extra that you put, the over collateralized amount that you put into that protocol, that amount is going to be liquidated. So that way it's being able to protect the decentralized platform if there's fluctuations within the market and that price of the asset goes down. They have to make sure that they're being able to make the money on that loan, and also for you, you have to make sure that you're maintaining the capital needed to satisfy those requirements of the loan. So that's one thing that you have to keep in mind, and this is very similar to with margins on a stock. When you are doing margins on a stock, essentially you're borrowing the brokerage company. They're lending that asset to you. You're borrowing it, and you're having an agreement to pay that loan back. Now, if the value of that stock goes down, if it goes below the minimum loan requirement, then you're going to get what's called a margin call, and then you're going to have to deposit the necessary funds to bring it back up to that minimum loan requirement. So you have to think, when it comes to cryptocurrency, there's a lot of volatility. So you want to make sure that you have enough capital deposited where you can be able to handle a 10 to 20% drawdown on the asset, and you still can be able to maintain that loan and being able to pay it back. Now, you may ask, why would someone want to take out a loan on their cryptocurrency? Well, I want you to think like a millionaire or even a billionaire. Their mindset is they don't want to sell any of their assets, because if they sell their assets, it's going to lead to a taxable event. Therefore, what they're going to do is they're going to borrow against that asset. That way, they don't have that taxable event, and they still can be able to satisfy any liquidity needs if they're trying to pay for a down payment on a home, or they're trying to make an investment for an investment property, or they are wanting to put some funds into their business. This is how people think. Millionaires and billionaires think, and that's the same type of strategy you want to have. Now, you definitely want to do your research, and you want to make sure that you have enough capital to be able to handle that loan. But it's definitely a great way for you to be able to use some leverage responsibly, and being able to have that liquidity without having to go through that taxable implications. Now, I can't stress the importance of doing your own research, and I want to give you all some things to keep in mind when it comes to doing your research. So one thing that you want to do is you want to check to make sure that these platforms have gone through audits. There's a lot of fraud within this industry, especially within DeFi. You want to make sure that these companies have gone through audits, and they have done things to make sure that their protocol is transparent and is honest. So definitely take a look into the audit of that particular crypto asset or the crypto exchange. And a great website that you can use is called DeFiYield.com. I actually will put that information here in the show notes. But as you can see here with DeFiYield.com, essentially what you can do is you pretty much will just look up whatever you're needing to find for the crypto, the decentralized platform, whether it's Aave or Compound. And this one is actually Aave, and what I had looked at was Certec. And when you go to Aave, the website for Certec, they take you to Aave, they show you their security score, they show you the audit history, which you can see here, the last revision date was back in 2020. It just gives you some other analysis. So DeFiYield.com is a great platform. I also really love DeFi Llama, which, as you can see here with DeFi Llama, it lets you look at all of the chains and shows which protocol has the most total value locked. As you can see here, Ethereum is leading by a landslide with 117.3 billion. You have some others here like Solana with 7 billion, Terra 27.12 billion. And then you can also go to an overview, and it shows you just the whole totality of the total value locked with all of the different DeFi blockchains. So that's a great resource. I'm also going to put a great article within this video on Cointelegraph. They actually discuss like how you can get started when it comes to your DeFi journey, and also you want to research the teams that actually created this protocol. Look on GitHub and identify the people that actually created these different decentralized platforms, and making sure that they're very transparent on what they're saying. So I'll put all of that information here in the show notes. As always, I thank you all for listening, for watching. I appreciate your time. Continue to like, subscribe, and share this video, and I'll see you next time.